Good morning, welcome to GrainTV. This morning is December 15th, 2011. I'm Logan Burgess. To my right is my good friend Cody Bills. Cody, it's Thursday. Export sales figures came out this morning. What are we seeing over there?
Exports actually met expectations here. Corn, 504,000 metric tons versus an expected 500. Beans was not quite as exceptional here, 468,000 versus 500,000. I would almost consider that about meeting expectations. It's a little bit under, but not by much. It's no game changer. Wheat at 318,000 metric tons versus 350 expected. Once again, a little bit disappointing, but certainly no game changer here. This is just not going to add a lot of fuel to the Bears' fire here, but it also doesn't give the Bulls a lot to work with. Take a look at the progress. We're in week 14. Corn ahead of pace by 84 million bushels, but we actually, and this is 84 million bushels to actually meet USDA expectations for export sales. We actually slid 6 million bushels since last week. Take a look at beans. Same sort of situation here, but we're actually well behind, minus 44 million bushels, but the same sort of situation this week. We actually slid another 3 million bushels since last week. So overall, we did not improve our position in export sales, but I do not anticipate this to affect the market significantly this morning.
Yeah, Cody, like you were saying, export sales in general were kind of neutral, so I think the grain trade this morning is going to be looking at the dollar index and external markets. Take a look here at the dollar index chart. You can see that, kind of driving these sluggish export sales was a relatively strong dollar as of late. In the overnight session, we saw a little bit come off that dollar. It looks like it's losing steam. There's some good news out of Europe. Spain had a very good sovereign debt auction this morning, so that's contributing to the dollar index backing off a little bit. Also, it was approaching overbought territory last night, so we could be seeing some speculators profit-taking and going flat on their positions. So I think that's kind of going to spur some buying here in the morning session.
Yeah, so the bottom line here is traders are just not going to really be focusing on export sales. They will, however, be paying close attention to the U.S. dollar. We're going to take a quick commercial break. When we're back, we're going to watch the markets as they trade. There's some key support levels out there. We'll take a look and see if they break.
I used to have several sites. Now I kind of like the grower's edge. It gives me that cash max. You can tell it which markets you're looking for, and it will tell you what your highest net back is based on the price they're paying at that time and the basis that they're paying. And that's pretty handy because I don't have to go to so many different sites.
Welcome back to GrainTV. This morning, Cody, on the board in Chicago, we're seeing corn down 2, beans up 7, and wheat hanging in there up 2. It's kind of interesting to see corn the only one showing red on the board here. What's your take on that?
Well, we had a really weak close yesterday. We closed right around that 580 level, 580 and a quarter. Overnight, we really didn't do anything. We didn't bounce around. The range was very tight. This morning, we're pressuring that support level. We dipped down below. We're now trading at 578. Like I've said, with all these major support levels, you're going to want to make sure that it closes below before you confirm that it is in fact broken that 580 support. Right now, we're not getting a lot of conviction to this break lower, but that could happen as we move throughout the day. Of course, the trade is focusing very closely on the U.S. dollar, so we're also going to want to watch that going forward. Logan, in terms of beans, I know you were watching that very closely yesterday. We had a bounce off the $11 support level. What are your thoughts going forward on beans?
Yeah, well, it's kind of interesting to see a little bit of buying here come into the bean market today, like we just showed, up 7 here. Kind of mainly the result of the U.S. dollar, it looks like right now, because export sales actually came in below expectations. Let's take a look here at where beans has been and where it's going. We see beans trading well below the 50, 100, and 200-day moving averages. So it's clear it's in a downtrend to me. But let's take a look at some price action that we saw just yesterday. Take a look at this chart. We traded down hard off the open, and we actually traded down below the $11 level. Rally back. I know you and I were watching the Fire Tip platform yesterday late in the session, and take a look at this very last candlestick that we formed here. The bears were really dragging that thing, trying to see a close down below 11. The bulls came in and said, not today. We ended up having a last trade around 11.03. So it'll be really interesting to watch this. If I'm a producer today, I'm really watching this January bean chart closely, and I'm watching for a close below $11 for confirmation that we're due to go lower.
Yeah, this is just another example of when you want to close below that key support level to really see the break. You can see we dipped down below for beans yesterday. We dipped down below it, but then we popped back up, and it was a support level for the remainder of the day. And this morning we're higher. So the bottom line here, let's watch it close. In terms of grains overall, it doesn't look overly positive. Of course, everyone's focusing on the dollar here this morning and economic news coming out of Europe. We'll see how things go from here on out. I'll see you on Thursday.
Have a good one.